Bitcoin is trading inside a defined structural range. Price is compressed between the Fibonacci resistance cluster at $71,329 to $71,781 above, and the Fibonacci support cluster at $63,347 to $63,493 below. Right now, it is testing what those clusters are really made of, because something has quietly shifted over the last 3 sessions that the majority of market participants will have missed entirely. If sellers can reassert control and push through the support cluster with sustained closes below $63,347, the path towards $60,000 opens. If buyers can build on what the last 3 sessions have revealed and drive through the resistance cluster with acceptance above $71,781, the structural balance shifts decisively. But the story today is not about what happens next. It is about reading what has already happened and what it is telling us. Here is the map. Higher time frame prevailing trend remains up. The lower time frame is painting a picture of indecision, working within a defined range. But within that range, a silent pivot has been developing. Let us build the picture. In today's briefing, the exact higher time frame framework containing this market, the 3 candles that reveal a silent shift in control, and the one level that determines whether this pivot has meaning. Stay with us. The detail is in the candles. Welcome back. We are price action traders, focusing exclusively on Bitcoin's structural analysis for traders and investors. As always, we frame today's briefing around 5 structural questions. Where are Bitcoin's key price zones? Are the timeframes in harmony? What is volatility telling us? How are DXY and gold influencing Bitcoin? And what must change to revise Bitcoin's structure? Before we read the candles, we need to anchor today's analysis in the higher time frame framework, because without that context, the 3-day pivot is just noise. With it, it becomes significant. At the yearly level, 2026 has broken the 2025 lows. The year opened at $87,626 and is currently trading at its yearly lows. That is a statement in itself. But the higher time frame prevailing trend, built across 2023, 2024, and 2025, remains up. A correction within a bull market is not a new trend. It requires confirmed lower highs and lower lows at the yearly level to become one. We are not there. The yearly trend is up. Now look at February specifically. The monthly range was defined almost entirely in the first week of February. The February high of $79,344 was set on the 1st of February, the opening session of the month. The February low of $60,000 was set on the 6th of February, just 5 sessions later. In a single week, buyers and sellers between them drew the boundaries of the entire month. Everything since has been a negotiation within those boundaries. Here's what makes that framework so revealing. February's range of $79,344 to $60,000 sits precisely within the lower half of the 2026 yearly range of $97,900 to $60,000. February is not just weak, it is defining the lower half of the year. And within that, the market has gravitated toward a corridor that no indicator drew for us, the round number psychological range of $60,000 to $80,000. These are not Fibonacci levels. These are not moving averages. These are the numbers that every participant in this market knows. The midpoint of that range is $70,000. And as we speak, Bitcoin is trading below it at $67,973, sitting $2,027 beneath that psychological waterline. We will return to that $70,000 level when we define today's structural trigger, because yesterday's session touched it, and what happened there tells us everything about the current balance of power. The lower time frame picture is one we covered in detail yesterday. In our Fibonacci battleground briefing, we defined the exact clusters, $71,329 to $71,781 resistance and $63,347 to $63,493 support that have been containing every move since the 6th February low. If you haven't seen that video, the link is in the description. Those clusters are the walls of the room Bitcoin is currently trading inside. Today, we're looking at what has been happening within that room over the last 3 sessions and what it reveals about who is gaining control. As always, we frame Bitcoin around 5 structural questions. The first, where are Bitcoin's key price zones? We have just answered. The Fibonacci clusters are the boundaries. The round number range of $60,000 to $80,000 is the macro framework. The $70,000 midpoint is the psychological line in the sand. Now let's look at what the time frames are telling us about harmony. The higher time frame prevailing trend is up, but the lower time frame narrative over the last several weeks has been clearly bearish. Lower highs, lower lows, weekly downtrend intact. The question the market has been asking is whether this lower time frame bearish move is running out of energy. The last 3 sessions have begun to answer that question. On 23rd February, sellers took their opportunity. With DXY and gold both pushing modestly higher at the start of the week, sellers pressed Bitcoin through the Fibonacci support cluster floor at $63,347. The low of the session was $62,527, a break of $820 below the support cluster. On the surface, this looked like a bearish continuation, but look at the close. The session closed at $64,660, back above the Fibonacci support cluster, $1,167 above its upper boundary. The lower wick on that candle is the story. The sellers broke the floor. The buyers took it back. The close is the verdict, and the close was with the buyers. On 24th February, sellers tried again. The low of that session was $62,527, identical to the prior session. The same floor, the same test, and the same result. The session closed at $64,139, once again above the Fibonacci support cluster. 2 consecutive sessions, 2 breaks below the support zone, 2 rejections, 2 closes back above. The candlestick lower wicks are not random noise. They are buyers defending their territory with conviction, twice at the same level. Structure does not lie. Sellers could not achieve acceptance below the cluster. We have defined the floor that held. We have defined the 2 attempts that failed. Now we define what happened in the 3rd session, because this is where the pivot becomes visible. We have seen sellers break the floor twice and fail to hold it twice. Now the question is what the buyers did with that information on the 3rd session. On 25th February, something unmistakable happened. The session opened at $64,097, and the low was $64,005. That's a lower wick of just $91, virtually non-existent. In candlestick analysis, when the open and the low are almost identical, you're looking at a bullish marubozu, sometimes called a shaven candle. It means buyers controlled this session from the very first trade, from Tokyo to New York, from the Asian Open through the European session and into the close of New York. Not a single meaningful attempt was made to push price lower. Sellers, who had twice broken through the Fibonacci support cluster in the prior 2 sessions, could not get within $512 of it on 25th February. The seller's grip was loosening. But there's a second layer to yesterday's session that is equally revealing and that most participants will have walked straight past. Buyers did not just defend the floor, they launched. The high of the session reached $70,027, breaking through the psychologically significant $70,000 level for the first time in February. Buyers drove price from an opening of $64,097 all the way to $70,027, a move of nearly $6,000 in a single session, and then sellers responded. The long upper wick on yesterday's candle, $2,055 from high to close, tells us that sellers immediately defended $70,000. The session closed at $67,973. Buyers could not hold the $70,000 level, but the fact that they reached it from a session that opened just $604 above the Fibonacci support cluster is the silent pivot in plain sight. Comment below. Are you watching the $70,000 level as the next decision point, or are you focused on the Fibonacci resistance cluster above it at $71,329? We read every comment. So, what is the correlating macro environment telling us? DXY and gold are both worth examining, not because they are providing a clear directional signal, but precisely because they are not. The US dollar index has been chopping after reaching a recent high of $97.772. There's a slight lean toward a structure of higher highs and lower lows, but momentum is absent. What makes DXY particularly interesting at this juncture is the higher timeframe context. The dollar is currently perched at its yearly midpoint, undecided about whether to trade above or below. A dollar that can't make up its mind is not providing sellers with the tailwind they need to press Bitcoin lower. No clear signal from DXY. Gold has made a decisive move above its yearly midpoint and sits in a strong uptrend, but right now it is displaying what some call a harami pattern, or the pregnant woman candle. A dominant bar on the 20th of February, followed by two consecutive inside bars on the 19th and 18th of February. The harami tells us two things: indecision and compression. Gold is pausing within the shadow of its dominant bar, deciding its next direction. The probabilities, not certainties, favor continuation to the upside, with a break of the dominant bar high at $5,131, the signal to watch. Neither DXY nor gold is providing a decisive macro catalyst for Bitcoin in either direction. The battle being fought is Bitcoin's own. A brief word on volatility, because yesterday's session changed the picture. For most of February, daily ranges had been contracting sharply, compressing into the Fibonacci corridor. Yesterday's session delivered a range of $6,022, the largest single-day range since the dominant 6th February bar. Volatility is no longer absent, it is expanding. Expansion of this nature from a compression base is a structural signal. The market is beginning to move with intent. The direction of that intent is what the coming sessions will confirm. Everything discussed today reduces to one closing condition. The silent pivot over the last 3 sessions has told us that sellers are losing their grip on the Fibonacci support cluster. Twice they broke below it, twice buyers reclaimed it. In the 3rd session, sellers could not even reach it, and buyers drove price to $70,000 before being turned back. The structure is telling us the balance of power is shifting, but a shift is not a confirmation. Confirmation requires acceptance. On the upside, sustained daily closes above the Fibonacci resistance cluster at $71,781 would confirm that buyers have broken out of the corridor and the structural balance has shifted. The 70,000 psychological level is the first test. The Fibonacci resistance cluster at $71,329 to $71,781 is the second. Both must be cleared on a closing basis for the pivot to become a structural confirmation. Acceptance confirms strength. On the downside, if sellers reassert control and drive sustained closes below the Fibonacci support cluster at $63,347, the pivot narrative is invalidated. The path toward the dominant bar floor at $60,000 reopens. Until that low is broken convincingly on a sustained closing basis, the 6th February structural floor governs everything beneath it. We monitor, we do not anticipate. The structural trigger is clear. Acceptance above $71,781 on a sustained closing basis shifts the framework toward recovery. Rejection back below $63,347 returns sellers to control. The candles of the last 3 sessions suggest the momentum is building with the buyers, but structure requires confirmation, not suggestion. Price action remains the final arbiter. Everything discussed today reduces to one closing condition: acceptance above $71,781 or failure below $63,347. Until that resolves on a sustained closing basis, this remains structural containment. The silent pivot is visible in the candles. Confirmation is not yet in the closes. If acceptance develops, the path opens toward the $70,000 to $80,000 corridor. If failure confirms, transition toward the dominant bar low at $60,000 becomes the primary narrative. The next daily close provides that signal. We will assess it in tomorrow's briefing. If today's briefing added clarity to your analysis, please consider subscribing. We publish daily Bitcoin structural analysis at 7 a.m. EST, built on structure, not speculation. Comment the level you are watching, $70,000 or the Fibonacci resistance cluster at $71,329. One principle guides every decision we make. Structure defines context, and context defines edge. Look forward to sharing tomorrow's briefing with you. We publish every day. Until then, look after yourself.